In preparation for this video, I did a little bit of research on YouTube, and perhaps this is not the first stimulus investing video that you're watching either. One of the things that I found in the videos is that they seemed very intimidating, introducing like the big world of investing to people who are looking perhaps to invest for the very first time. And what I suspected was confirmed in the comments when I read things like, "I'm really scared to start investing," or "I'm afraid I'm going to lose money." So this video is for those people who are looking at a $600 check and thinking, "I know I should invest, but I really don't feel comfortable starting." So I'm going to steer clear of technical terms or advanced strategies. I'm going to be talking about the concepts that were most helpful to me when I started investing, and I'm going to try to keep it really simple. So to that end, there are 4 things that I want to deliver to you, and I'm going to leave some timestamps in the comments that you can click on to jump there immediately. The first thing we're going to talk about is why the rich get rich and the poor stay poor. And once we can answer that question, we're going to talk about inflation, and then we're going to talk about investing in the stock market and investing in cryptocurrency. And then finally, as a little bonus, at the very end of the video, I'll tell you all of the stocks that I'm currently holding in my portfolio with a 1-sentence summary of why I decided to invest in those stocks. So we're getting started with the question of why do the rich get richer and the poor get poor? And actually, the catalyst for making this video was a comment that I read on Facebook. Somebody was criticizing Congress for this crappy handout the government was giving us and talking about how, the government is supporting these other special interests and not really looking out for the American people. There's something very important to understand and something that was missed in that criticism. Rich people don't get rich because of the laws that enable them to get rich and keep getting richer. They get rich because of how they understand and treat money. Meanwhile, poor people stay poor because of how they understand and treat money. If you want to understand why rich people get richer and poor people get poorer, just give a rich person and a poor person $600 and watch what they do with it. So if you understand that, the question now is, what can you do about it? How are you going to change your understanding about money and how you treat it so that you can better your position? All right. We're going to turn our attention now to the value of a dollar because it's important to understand the economic impact a stimulus is going to have. The way the stimulus is going to be paid for is by essentially printing more money and giving that money away in the form of $600 checks to the families that qualify for it. This is going to increase the number of dollars in the entire economy, which is going to decrease the value of an individual dollar. You could think of it this way. Remember arcades when you were a kid? You'd play a game and the tickets would print out. You'd use the tickets to buy the prizes. What if you could go to an arcade that printed 10 times as many tickets? Well, you could go there and you might get excited because all of the tickets are coming out of the machines, but the result at the end of the day is that all of the prizes are going to cost 10 times as much. Ultimately, costs will rise when there's more money in the economy. And so if costs go up, the value of a dollar decreases. And that's it. That's the important thing that you need to understand. The value of the dollar decreases. So when you get that money, there are probably 3 things that you can do with it. You can save it, you can use it to pay bills, or you can invest. Now, if you save it, you're putting aside money that's going down in value. There is no interest rate that's being paid in a bank that's going to compensate for the loss in that value. That was probably an oversimplification. Interest rates change, so does the rate of inflation. However, I can tell you this much. Bank rates suck. That much is true. If you use that money to pay bills, one positive effect that might have on you is it might actually increase your credit score, which can actually be a form of investment in yourself. So if you have high credit card bills, for example, or if you have a smaller bill that you can pay off immediately by using the stimulus check, there's actually a nice little bonus that you get in your credit score for doing that, and it's not a bad idea. When you use that money to pay your bills, it's going to end up in the hands of corporations. So you're not exactly bettering your position immediately. It kind of depends on what you do with that credit score once you earn it. So lastly, you can invest that money, which is what we're going to talk about next. But the big idea to get here is if you use that money or if you save that money, the value of the dollar is going to decline. So now we're going to talk about investing. And for this segment, I want to be clear that I'm giving you my personal advice, and there will probably be people who disagree with me, and I am also not a financial advisor. However, I am framing my advice keeping in mind that you may be investing for the very first time. This is the best advice that I have to give for somebody who's starting out. If you're doing this for the first time, if you want to start in a way that you can feel confident about, and if you want to learn as you go along and you're afraid of being intimidated by the experts who have very advanced strategies, this is my advice for you. I'm going to start by telling you what my experience was when I began investing. I was 18 years old, I was attending college, and my grandfather gave me $1,000. And when he gave me $1,000, he said, "Ben, this money is for investing in the stock market. I want you to use it to learn how to invest." He gave me a little bit of advice in addition to that, but the most important thing that he said was, this money is only to be used for investing. So for me, I didn't have the option of using that money to pay for college expenses or buying a new laptop. I had to use that money. It was set aside for investing. And that mindset helps immensely. When I understood the money was to be used to learn how to invest, it reduces the fear of loss, because you'll pay to take a lesson, right? Like, I was paying to take college classes. Why wouldn't I be willing to pay to learn to invest? And in a sense, you pay in the form of that risk that you might lose. However, out of all of the classes that I took while I was going to university, what I learned by investing was by far the most valuable. Not only was it valuable in the sense that it was a lesson given to me by my grandfather, but it's actually quantifiable. I can count the number of dollars that I made using that investment. So my advice to you is to start investing the same way that I started investing, which has nothing to do with reading what you might hear like fundamentals or reading charts. I wasn't looking into earnings reports, okay? All I was doing was identifying a company that I believed was on a pathway to be successful, to be innovative, and to continue to create value. When you do that, when you research the company and what the company is about and how the company operates and the way they innovate their products, you can get a confidence that comes not from what people are saying on Twitter, what they're saying on TV, but a confidence that comes from your understanding and your belief in that company's mission. And by the way, if you need help finding the kinds of companies that I'm talking about, at the end of this video, I'm going to tell you all of my favorites. But for your own sake, don't just take my word for it. Do a little bit of research on your own so that you can grow from this experience. The hardest thing about investing, and especially for beginners, the greatest source of what could cause you to lose money is going to be a fear of loss. And two kinds of loss, by the way. One is the fear of losing more money. That's where the value of the stock is declining and you're afraid that you're going to lose more, so you sell way too early and you end up taking a loss because you're afraid of losing even more. The other is the fear of missing out. That's when everyone seems to be talking about the same stock and it just keeps climbing and climbing and you just can't help but think, gosh, I want to get in on this. You end up getting in right before it crashes and you lose money that way. So the way you mitigate those fears is by understanding the value of the company that you're investing in. When you understand the value of that company and there's a dip in the stock price, it's okay. You can relax because you know what the company is up to and you know that they'll pull through it. Or if everyone's talking about something and you're afraid of missing out, but you don't understand what's going on, then you just steer clear and you avoid anything. Now, if you do the research and you find out that indeed this company is worth what everyone says, by all means, get in there. But don't be rash. Don't be rash. Now, that is the most important lesson that I have to share with you. But before I move on, I want you to understand one more impact from a stimulus check. Remember how I said you're going to save or pay off bills or you're going to invest? What's going to happen to the stock market? Everyone who's paying off their bills, whose bills are they paying? They're paying their credit cards. They're paying for a new purchase. They're paying off their cell phone bill, whatever it is, right? All of that money is going into the companies. That money is going to come up in their earnings report. That money is going to make it look like the companies are doing well. And what about all the new investors? All of a sudden, all of these new investors are entering the market. That money is going to go into the stock market, and all of these companies, their valuations are going to go up. You're going to see basically an inflation in the stock market, just like we see it in the individual dollar. The only difference is the companies are going to have some value backing their valuation, whereas your dollar doesn't have anything backing it at all. So finally, we're going to talk about cryptocurrency. And admittedly, cryptocurrency is a lot scarier than companies, because with a company, you can understand what the company produces to create value, whereas cryptocurrency is kind of like a dollar in the sense that it's only worth the value that people believe in. And cryptocurrency can crash for no reason at all, other than people just decide they want to cash out on their gains. So why is cryptocurrency then a worthy investment? Well, here's why. You might hear that Bitcoin is the new gold. What does that mean? See, there's a limited supply on how much cryptocurrency there is. You can't print more cryptocurrency. In that regard, cryptocurrency is now what the dollar used to be when the dollar was backed by gold. Now, you're probably aware that there are different kinds of cryptocurrency. So what's that all about, and which one should you invest in? So to understand that, you kind of need to understand a little bit more about what cryptocurrency is. And to make this very brief, cryptocurrency has to do with transactions between computers. To go one level deeper, if you've heard about blockchain, cryptocurrency is what's paid between computers when computers spend time validating or processing work on the blockchain. Now, that's probably too wordy. Basically, these computer engineers figure out things that they need computers to do, and they invent a cryptocurrency in order to pay for it, because cryptocurrency is the payment that takes place when computers are trading work getting done. So for me, personally, the cryptocurrencies that I'm invested in are Bitcoin, Ethereum, and Ripple. The reason I'm invested in Bitcoin is because it's kind of the core cryptocurrency. The reason I'm invested in Ethereum is because Ethereum is designed for operations. And the reason I'm invested in Ripple is because Ripple is designed for fast transactions. I've taken the time to understand it, and I think I would at least follow this advice. It's probably not a good idea to put all your money in cryptocurrency, but it's also probably not a good idea to put no money in cryptocurrency. Okay, so here we go. I'm going to go down a list of my favorite stocks and one sentence why I've invested in them. So if you are new to investing and you want to get started today, I've got 2 referral codes that you can use on the mobile app Robinhood or COINBASE for cryptocurrency. Robinhood is great because it has commission-free trades, and when you use the referral code, you get a free stock. And cryptocurrency will also give you $5 of Bitcoin. So again, the referral code is in the description. I'm invested in Tesla because I own a Model S, solar panels, and a Powerwall. I know the company well, and I believe in their innovation and what they're trying to accomplish. Palantir, which was founded by Peter Thiel, I'll let you look up who that guy is, and they are innovators in processing big data, which is going to be a huge industry, and we're going to see a lot of growth in it. I also believe there's going to be growth in 5G, so to that end, I'm invested in Broadcom, Qualcomm, and Eric, which all offer dividends, which I like, and I think there's going to be a lot of growth in that sector. Apple, which has total mastery of its supply chain, and so it exercises complete control of its product and its user experience, which is why people are so addicted to staying inside the Apple ecosystem. Enphase, which is a big deal in solar panels, and like Tesla, they create batteries, but they do them in a modular way that allows people to add them slowly to their house, and that allows them to build their system and grow easily as they do. And then finally, Plug, which manufactures and innovates hydrogen fuel cells. I don't have any money invested in mutual funds and index funds. Nobody makes choices on where my money goes. I manage my money. That's a choice that I make. I don't think investing in mutual funds and index funds is a way to help you learn, but for many people, that's kind of the easy way out. It's giving your money to somebody else to deal with. And personally, it's not for me. I don't recommend it to others, but it is very safe. And I will say that for that, it's probably better to put your money in a mutual fund than it is to put it in a savings account. So that is what I've got to offer you today. That last part, I did that so quick. If you have any questions, will you put it down in the comment? And if you liked what I covered in this video today, will you give it a thumbs up? This is kind of like new content for me. I'm really interested to see what my viewers say about it. So give me a signal with like a thumbs up, subscribe. Comments are awesome, by the way. I always try to respond to those. And thank you very much. This is a channel. It's called Never Been Better. I make videos every week. And if you come back, I will see you next time. Take care and Happy New Year. Bye-bye.